Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you are disco win. Please, before I start, if you like, share, subscribe, please do that. This is only a gold GDX brief, as a matter of fact. Just focus on GDX. Period. I have a bearish case. Maybe for the next 3 trading days. Maybe, hopefully. Hopefully the bottom will be in this week. It could be. It really could. So as of now, it's almost impossible that we made a bottom. I hate to be this assertive, but I have to be. I have to believe in my analysis. All right. So this is the equity put to call moving averages only, and the bearish disco is on. It is on when the 20-day moving average goes over the 50-day moving average. Usually, this provides a lot of selling pressure on GDX at least for a couple of days. Very few, with very few exceptions, extremely few exceptions. So that's one point against GDX, and also against the whole market, by the way. So this implies continuation of volatility. Only on Friday it went up 14%. The equity put to call, that is. All right. So this is the weekly time frame for the MACD of the equity put to call, and this is the third sell signal back to back, and that's what happened in GDX. Every time this happens, it provides selling pressure on GDX. Sometimes this selling signal lasts for maximum 5 weeks. So I'm really hoping that next week is the bottom. I really am, but I can't tell until I see it before my eyes. So that's another case against GDX, which is the sell signal on the bullish MACD and equity put to call in the weekly time frame. This is also against the whole equity market, but I'm talking about GDX right here. All right, talked about this bad boy, and I wanted to show that weekly time frame, how it affected it. If you put it on the top, if you put the GDX price action and the MACD of the equity put to call in the weekly time frame on the top of each other, you will see it. You can do it on your own tool. All right. This is another thing I notice all the time. Every time you have a negative divergence between GDX price action and the JPY USD, which means if you have a higher low in GDX, like here, and lower low in the yen USD, usually the yen takes GDX down. It happened here, exactly 15th of June 2023. It happened when you had a lower high also back in 27th of July, and you can see it here. So this thing repeats itself all the time. I think the market makers in GDX are not very bright. That's why this thing happened. Usually these specialists or operators are not the smartest of the pack usually. That's why they have this job. They acting like, I don't want to say bad things about them. But if you are a market maker in GDX, I could help you. You could always use people's expertise. Don't undermine people's intelligence. So that's one flaw. I always see some would say the market makers make money on the spreads. Believe you me, I worked next to them. It's not only the spreads. Sometimes they have to have inventories of shares. Sometimes they liquidate. They also try to make money in other ways, not only the spreads. Okay, good deal. So that's third third point against GDX, which is the negative divergence with the yen. All right. Okay, another thing, a sell signal triggered by bullishness in the USD DXY in the weekly time frame. This never, ever been good for GDX, ever. So you have a bullish disco combo, RSI over 50, bullish stochastic, and bullish MACD. If you put it on top of each other, you would see how bad it acts and how bad it affects GDX. You could do it on your own time. I discover, I usually play with the charts. I can really write a book how to make money trading gold like a pro. If you're willing to finance it, please let me know. All right. So this is the USD in the weekly time frame, and it's a buy signal in the DXY, sell signal in GDX. All right. Another thing, you have a bearish formation in GDX, where you have the price action found sellers for the last 2 days on the 10-day moving average. So you have the 10-day below the 200 and the 20 below 50 right here. And now you're going to have a bearish crossover between the 20 and the 200. And maybe very, very soon you have the death cross very soon between the 50 and the 200. You can see now the colors for these moving averages. You can see it right here. Okay, good deal. All right, so bearish formation in the major moving averages in GDX. Good deal. So another thing I notice usually GDX goes down in four down legs. So you consolidate close to the bottom, then one more time. I always call it one more time. This is in June 2021, 1, 2, 3, 4. And also you could find it here recently in 2022, June 1, 2, 3. There's another fourth I could show Tayez. Okay. So this one, 2, 3, no wait, 1, 2, 3, fourth. 1, 2, 3, fourth. And now you have a bearish consolidation in a former triangle or pennant, and this repeated itself here. It was here in September 2022. You consolidated right here, and we're doing the same. Anyone that fails to recognize this continuation pattern is not a technician at all. That's why I think the market makers need some help. They really do. They truly, absolutely do. Please, if you know the GDX market maker, please, if they want to contact me, I will be willing to help them. There's nothing wrong with that. Nothing wrong with that. It is okay to know that you know nothing. You know nothing. You know nothing. Try not to be negative. I always look at the market makers and I feel really bad. Okay, so this is the pennant, and the one more time, which is 1, 2, 3, and fourth. Last time it went down about 6-7%. Maybe it happens same time too. Okay, so four legs down. Okay, and this is the main thing for me now. You have 1, 2, 3, 4, 5. This is the weekly time frame for GDX. You have 1, 2, 3, 4, 5. There's no violation at all. So A, B, C. I think C will end at 2780. I think because if you focus now, usually the down leg started from this box right here. I don't know if I have it here. So let me keep this bad boy and see if I have it here, man. All right, and here. So I did it here, but I did not do it like I wanted to do it. Final now. It's okay. So this is exactly what I was talking about earlier. So it went down 8.7. Look how where I put. I did this a couple of days ago. So I expected this bad boy to go all the way to this green thing, and I'm expecting 6.7% sell off next week. Hopefully next week, so we could make some money later. Okay. So this is where the meltdown started. The bottom was in April 26th, the top, first top, May, and mid-April. So usually this, when you have a move, the termination of that move is the 262 Fibonacci extension, ABC, okay? So it came with 5 waves down, A, 3 up, C, and 1, 2, 3, 4, 5, C. So it's a zigzag. This whole thing is a zigzag, okay? So 262 usually, and I'm almost certain if it goes to this bottom, I'm almost certain we're gonna have a bounce. So this thing will terminate at 262, which is the 2780. So in conclusion, for Elliott wave, you have the 5 waves up, beautiful 5 waves up. Then you have the ABCs. So completion of this 5 waves up, and hopefully this will be 1, and 2780 would be 2, and we're gonna have an amazing, gorgeous, beautiful bull market in GDX and gold, and it's gonna be good times. These are the good times. So ABC, this ABC will terminate at 262 Fibonacci extension of this trading range at 2780. Please like if you like. Please share. Please subscribe. Please do remember, disco is forever.